It's a 31-year-old dividend growth investor that's going on my 7th or 8th year full-time investing in different dividend-paying stocks and ETFs. There are a ton of very important things I know today that I wish I would have known when I first got started. Now, even though as of right now, across all my portfolios, I earn roughly $60 to $100 per month in dividends, or around $81,000 per year in total. My dividend journey started off just like anyone else's, buying a few shares of a dividend-paying stock with the hopes of my dividend income growing substantially over time. Now, in this video specifically, we're going to go over 3 simple yet very important inputs that every single dividend growth investor needs to pay attention to, and the faster you pay attention, the faster you understand these inputs, the faster your portfolio is going to compound. So if you're a dividend growth investor and you want to learn about these 3 inputs, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, of course, I could probably make this video an hour long and go over all the ins and outs of dividend growth investing and how every new investor out there needs to do X, Y, or Z in order to build a long-term portfolio that's going to pay you more and more in dividends over time. But in short, there's 3 massive inputs I think every dividend growth investor needs to pay attention to, especially if they're just getting started out. Now, the first input, this is a very important one. I'm talking about dividend growth rates. Now, dividend growth rate, according to Investopedia, is basically the annualized percentage rate of growth of a particular stock's dividend over time. And it's really not all that complicated. Let's say a stock, year number 1 that you own, it pays you $1. Year number 2, it pays you $1.05. Year number 3, it pays you $1.07. Year number 4, $1.11, etc., etc. The dividend growth rate is basically just year over year how much dividend has grown, which in this example would be 5% from year number 1 to 2, 1.9% from 2 to 3, 3.74% from 3 to 4, etc. Now, buying into different dividend stocks and or ETFs that have a positive or a higher than average dividend growth rate is going to give your portfolio the potential to compound a lot faster, a lot quicker, which is going to make your cash balance stretch a lot further later on. Now, dividend growth rate is sort of a boring metric that isn't as flashy as dividend yield, because let's say, for example, SCHD ETF, an ETF that only yields, say, 3.5% starting, even though the yield is relatively low compared to something like JEPI or JEPQ, for example, or QYLD, SCHD's dividend growth rate is substantially higher than most other stocks and ETFs across the market, which means that year number 1, you're not necessarily going to get paid a massive dividend, but year number 2, 3, 4, 5, 6, 10, 20, you're going to most likely get paid a ton of cash flow later down the line. Now, number 2, the next very important input I want to spotlight for all newer dividend growth investors out there is reinvesting your dividends as much as you possibly can. Now, in my portfolio as of right now, like I said, on average across all my portfolios combined, I'm earning roughly around $6,500 to $7,000 on average per month. Now, this means that with that cash balance, if I'm able to reinvest it into more dividend-paying stocks and ETFs, which is what I'm doing currently and which is what I've talked about a lot as of recently, the fact that my dividend snowball seems to be growing out of control because my monthly dividend income amount is substantially higher than it even was a year ago. Now, the way that it's gotten so high is because I've been reinvesting my monthly dividends into more dividend-paying stocks and ETFs, which of course in turn pay me more dividends the following month a lot of times, which is going to allow my snowball to compound and grow a lot faster. Now, even if your entire dividend portfolio is only paying you, let's say, $10 per month on average, or $20 per month, or maybe $100 per month, which is a huge milestone to pass. By reinvesting those dividends into more dividend-paying stocks and ETFs, it's not going to be long until you really see your portfolio start to snowball out of control. Now, I don't think this is necessarily going to be a big issue for most dividend growth investors out there. A lot of you guys watching this video are currently reinvesting all your dividends and then some back into your portfolio, but I just want to make it very clear, especially from day one, if you reinvest the dividends along the way, your portfolio is going to grow a lot faster, a lot larger, quickly. Now, input number 3, this is another very, very important input, especially in the early days of investing. This isn't necessarily something as important as of right now for me because I'm right now reinvesting all my dividends per month, so I don't even necessarily have to make massive deposits into my portfolio anymore without my portfolio still growing consistently. But in the early days of investing, consistent deposits are going to be key. to keep your portfolio growing up and up, and to get your portfolio to the point to where then you can reinvest the dividends, and it's going to be a substantial amount. Now, I understand not everyone can consistently deposit into their dividend growth portfolio, but even using things like side hustles or other ways to generate a little bit extra income on a monthly basis to make sure those consistent deposits come in, whether it's $100 per month, $1,000 per month, or $1 million per month. Whatever it is, consistent deposits are going to be key, especially in the early days, to get your portfolio growing to the point to where, like I said, it can sort of sustain itself. The dividends that are coming in can buy you a good amount of assets on a consistent basis, along with dividend growth rates. Just these three metrics alone, just these three inputs alone are going to help you substantially, especially if you're in the early days of investing. And I personally wish I would have came across a video like this early on, because even something as simple as looking out for different stocks or ETFs that have a positive dividend growth rate, which means you're going to get paid more and more in cash flow over time, that's something that I didn't really learn or pay attention to up until maybe a few years back. But I promise you, if you pay attention to things like dividend growth rates, you reinvest the dividends along the way, and also make sure you're consistently depositing, your dividend growth portfolio will be exactly where you want it to be in the future. I almost guarantee it. So now that we've been over three important inputs, maybe three of the most important, especially for newer investors when it comes to dividend growth investing, I want to hear from you guys down below. What is your number one favorite dividend growth stock or ETF that you've been buying a lot as of recently? Drop the ticker symbol in the comments. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.